Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun, looking at charts, like the chart behind me, which is of Polestar Automotive, ticker symbol PSNY. And here I am recording this on Tuesday, June 4th, after the market has closed and Polestar closed at a price of 75.18 cents, being down just over 7% on the day, but moving up in the after hours, closing the after hours session at a price of 77.89 cents, being up about 3.6% in the after hours. So regaining some of that loss from the day. So not looking as bad as it could be. But, there are some things in the chart that I did want to go over that might actually stand out as not looking so great. But, I'm just going to start with these levels that are up here. And I went over all of them in last week's video. So this might be a little bit redundant, but we do have some more data here with 5 more candles following when I put out that last video, which came out on the 28th. We also got some more volume, so I did want to talk about that as well. But yeah, here, looking at the chart, one of those levels that does stand out to me is the 1618 extension from this retracement here. That is at a price of 76.23 cents. We closed below it today, but in the after hours trading session, we did get back above it. So that's potentially good, but I like to do my analysis with the daily candles, not including the after hours or pre-market trading. Sometimes it can fake you out, so I do think that's something to be cautious of. And also, yesterday when it was requested that I do a follow-up on this, we were trading above this downtrend here, but we did break below it now. So I do think that is pretty significant. I do think that downtrend is one to be paying attention to. And so I'm just going to take a step back so we can see where that line originates from. And that is based on the lows from October 24th of 2022, as well as, I believe, let's see, approximately, actually not from there, that's just a bounce from that level. The other pivot point is right over here, the low from September 26th of 2023. And so we can see that over that large span of time, we have bounced off that level multiple times. It has acted as notable support as we have been moving down. But until recently, we have broken below it. So I don't think it's looking so good from that respect if we cannot get above that level. And so some levels that I do think are pretty key right around current price. One is going to be the all-time low at 72 cents, which was hit on May 29th, so the day after I put out that last video. And so, if we do get a wick down to 72, maybe a little bit lower, I don't think that's such a big deal. But if we get a close below 72 cents, I think that's going to suggest that price will be going lower, potentially down to 50 cents. So do keep an eye out for that, especially if there are 2 closes below it, one closing below it, and then the second closing below that next newer low. That would be a confirming close, suggesting price will be going lower. So do be cautious of that. And then so we do want to be getting closes above the 1618 here at 76.23 cents. Like I said, that's an important one, does seem to coincide with this white downtrend as well. So, if we can't get closes above that, if we can't close the week above both of those levels, I think that doesn't look so great. But then going just a little bit higher, following this consolidation that we've seen, the highest wick that we've seen was on the 24th. That was at a high of 87 cents. That's a level we need to get closes above. Just like we don't want closes below 72 cents, that would confirm further moves to the downside. We do want to see closes above this wick high at 87 cents. Getting one close above that could suggest price will go higher. Getting a second close above that new high that's higher than 87 cents, that could be a confirmation that price will be going higher. And so a level that does stand out to me is right around $1 a share, potentially coinciding with this downtrending line here. And so that is based on these 2 pivot lows. One being the low hit on February 23rd, the other being the low hit on April 25th. We did bounce both of those times, those are the pivot points, so of course we bounced there. But when we did come back to that level, we actually got a gap lower, and then we have started to see this consolidation down here following this big down move. So I don't think that looks so great, and I do think that when price does get back up to $1, if it does, I think that's going to be a tough level to be breaking above, so that is one I would be watching for. And on the note of it being a tough level to get to, $1 a share, or even getting some closes above 87 cents, if that doesn't happen this week, I do think the stock is looking pretty weak. And so a big reason for that is, really there are two factors. One is we've seen these pretty massive down moves. Let's see, let's just take a measurement of that from, let's say just the open of this day, the 16th of May, coming down to the lows. That's a drop of almost 50%, pretty big down moves. Following those big down moves, we've seen some consolidation. And so that makes me think this could be a bear flag. And, another thing that makes me think that it is a bear flag, that this is actually bearish consolidation, that we are more likely to see moves to the downside, continuation lower, is if we look at the volume. Because in the past, volume hasn't been that high. It's actually been pretty low relative to what we've been seeing recently. And so following these big down moves, we saw this massive impulse in volume going up massively on the 21st. And then following that big down move on that day, down almost just about 13.5%, 13.64% on the day with that gap down. And then we've seen this consolidation. And while volume has come down a little bit relative to the prior volume is elevated massively. So when you have price coming down, but volume is going up or is elevated, there's a divergence between price and volume, and that suggests that price will either continue to go lower or will start to go lower, will turn around and go lower. And so we're seeing what suggests that there will be a continuation to the downside. And I also have to say that with what's been going on with Polestar regarding their earnings report, filing those, I have not been feeling so great about the company. And I've actually been really curious about it the past few months. A while ago, I did do an earnings stream for them, which I thought was an earnings stream, but it actually ended up just being a business update. And I've always had a hard time finding their earnings calls on their website. More recently, just a couple weeks ago, I believe, they were supposed to have an earnings call, and I couldn't find the link, so I wasn't able to stream their call. Turns out they were delaying it, postponing it with the NASDAQ, and there are potential issues with that. And I saw a headline about there being accounting issues. And, with them being listed on the NASDAQ, being below $1 a share, potential issues there as well. If they're not able to get above $1, which I do see as being pretty notable resistance here, they might have some compliance issues. And if they're not able to meet the deadlines for posting their earnings because of accounting issues, that doesn't seem to me to be very good. And while I am intrigued by Polestar, given that they're a Swedish EV company based in Europe, that seems, really appealing. Their cars look really nice. I'm intrigued by the company, but I've been intrigued by other EV companies in the past, like Lordstown Motors, which I believe now is ticker symbol RIDEQ. They were delisted. They lost a lot of money. Also, more recently, Fisker, which is now FSRN, and that is, also been delisted from, I believe, the NASDAQ. And, we can look over at that chart. Let's look at Fisker here. And, following them being delisted, they are now over the counter. Price has been residing down here in the depths around 5 cents, getting highs up to almost 10 cents a share here, the highest high following their over-the-counter listing, 11.74 cents. So quite possible these gaps to the upside may never be filled. And it's been tough to go through that. I was accumulating shares and I've had to deal with this. And so I think when looking at a company like Polestar, I do think it is good to be cautious because there are a lot of signs that this bleeding that we have been seeing is just getting more aggressive, breaking below this white downtrend, having elevated volume. Look at the picture here. You can see that volume. It sticks out like a sore thumb. And with price being that low, I think it's going to continue. I think it may very well be delisted. And I think that this might be joining Fisker in the 5-cent range. But before then, it might be stopping at 50 cents, or maybe we do get a test of $1 before then. But, I just don't think it looks good, and I'm sorry to share my perspective on that. But that's just what I see in the charts. And, maybe there is a trade here in the chart, but for me at least, this one is just too risky, not worth it. There are plenty of other plays. And, I'm sorry to say that, but that's just what I see in the charts. And, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching. You guys take care.